Welcome to the latest Motley Fool Scoreboard. I'm on in Chocolate. We've got longtime fools, Dan Caplinger and Toby Bordelon, giving a 1 to 10 rating to the company whose returns over the decades have been much more interesting than watching paint dry. It's Sherwin-Williams, ticker symbol SHW. We'll talk about the strength of Sherwin-Williams' business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Dan's at a 7. Toby, you're a little higher at an 8.
Yeah, America's favorite paint company, right? Sherwin-Williams. They make paints, coatings, and related products for everything, residential, commercial, industrial, automotive. So a nice range here. Very good business, but you've got to be realistic about what it is, I think. They sell a product that, while not a commodity in its technical sense, has a lot of close substitutes out there in the market. So they do a very good job of selling it. But even so, there are limits on pricing power and growth they're running up against. We did see record sales last year, which is great, but management is expecting more modest growth in the coming year. And the still anemic housing market does create some headwinds for them. Dividends, nothing to write home about, but it is a nice bonus.
Just wanted to give a big welcome to Sherwin-Williams to the Dow Jones Industrials. That was a big shocker. I did not see that coming. Ended up entering the Dow at the same time that NVIDIA did. Toby's absolutely right about the business. You're not going to get NVIDIA kind of growth from Sherwin-Williams, but you can like its products. Its products definitely serve a purpose. It is the leader in its industry, and it's an industry that people need and will continue to need as long as you can think into the future. And so, yeah, a very good company. Comfortable giving it a 7.
Not bad. Dow only 30 companies, but Sherwin-Williams and NVIDIA, that's some diversification. Let's talk about management. A 10 is Warren Buffett. A 1 is Homer Simpson. Dan's at an 8. Toby, you're at a 7.
Yeah, I think the leadership team is good, but not necessarily stand out, though I don't know that this business requires a standout leadership team. CEO Heidi Petz is new to her role, having served in the top jobs just since last January, but she's been with the company since 2017, right? And has got a lot of experience in the industry. CFO Alan Miskin has been with the company since 1990, so a ton of experience there. They have done a very good job of running this business. But even better with a business like this, they haven't hurt it by trying to do something wacky in the name of chasing growth or weird innovation. This is steady leadership for a steady business, and I think that's what you want to see here.
Yeah, I just want to double down on that last point that Toby makes because, new leaders, it's easy to justify having to come into a business and say, okay, yeah, I'm going to make my mark. I'm going to make a big change. Sometimes a business doesn't need a big change. It just needs to keep running basically the way that it has been running and keep generating that success. I see Petz doing that, not giving into the temptation of trying to make a big swerve in corporate strategy. I give a lot of bonus points for that. That's why I'm giving it the 8 here.
For financials, a 10 is a fortress. A 1 is yikes. Toby's at an 8. Dan, you're at a 7.
Yeah, I'm a little bit concerned. We've seen flattish revenue over the past couple of years from Sherwin-Williams. It's good. On the bottom line, we've seen some improvement because margin performance has been a lot better. We've seen some rising margins in the short run. My concern is that a lot of efficiency-based gains that juice up margins, it's not that they're temporary in nature, but that they're kind of one-time incremental boosts. And ideally, you need to see those accompanied with longer-term revenue growth so that you get a bigger profit pie from a growing sized pie. And as a result of that, that's the missing point that I want to see. It's why I'm giving them a 7 on the financials at this point.
Yeah, I went with 8. I like what I see here. Revenue growth is low, but it's consistent. We've seen some nice incremental margin improvement recently. I think it's key to a business like this. Inventory do remain at reasonable levels. Now, debt is higher than what I might like, but it is coming down. Cash looks a bit low, but it's not alarming by any means, given the nature of the business. This tends to have a consistent and steady cycle here, right? Make paint, shift the paint, collect on your accounts receivable, pay bills, repeat. And that consistency is why I went a little bit higher here with an 8, because I just do expect that to continue, and I expect the cash to keep coming in.
Let's see if that cash coming in will juice returns. Let's talk valuation, Dan. How well will Sherwin-Williams stock do over the next 5 years? How safe is it? 10 is a sure thing. A 1 is a lottery ticket.
Again, I see a pretty common theme among my picks in talking on Scoreboard. I give Sherwin-Williams a 5 to 10% expected return average annual over the next 5 years. Safety score comes in a little lower than I expected at a 6. I was shocked to find when I looked at the metrics for the stock is actually more volatile than the overall market. It has a beta value 1.17. I was also a little bit surprised. The 2022 bear market, we tended to focus a lot on tech stocks that saw big declines. But Sherwin-Williams was down more than 40% at one point. And we've seen some other big pullbacks, even in a generally rising stock price for the company. Just a little bit more volatility than you would expect from a company in this industrial sector. But I think it does speak to the cyclical nature of the business that Toby was just talking about a minute ago.
Yeah, I'm similar to Dan here, 5 to 10% on the 5-year returns. I think a slight market beater, nothing to get too excited about. On safety, I went with a 7. They're susceptible to market cycles they can't control, right? But at the end of the day, I think they're just going to keep selling paint relatively steadily.
Time for everyone's favorite topic. Dan, is there a company in Sherwin-Williams space you like better?
I'd suggest take a look at a company called RPM International. It's ticker symbol RPM. It's a much smaller maker of performance coatings, specialty chemicals. Some of the brands that you might have heard of include Rust-Oleum, rust prevention, DAP or DAP caulking, as well as Testers paint for models and crafts. It's a stock advisor pick back from 2015. It's up 227% over the past decade since its recommendation. It has seen below market volatility along the way. I'm not trying to compare these. They're two different businesses, but RPM to me is kind of an interesting thing to look at for those of you interested in Sherwin-Williams.
Yeah, that's an interesting one. Honestly, the only paint company I'd probably rather own is Benjamin Moore, but you have to invest in all of Berkshire Hathaway to get that, right? It's not bad, but it's not the same space, really. Now, if we zoom out to the larger building materials, home improvement industry, I'd say I like Trex maybe a little bit better now. I think there's more potential for growth, but a very different business as well.
Thanks to both Toby and to Dan. They've given Sherwin-Williams an overall score of 6.8 out of 10, well short of the 8.0 that would force me to own shares. Look out for a new Scoreboard every market day at 7 p.m. Eastern. Next up is Mid-America Apartment Communities. Till then, Fool on. And I've given my shirt enough time to dry from spilling water on it right before taping. This is good.